You get it? So before you'll be able to identify zones in the forex market, make informed trading decisions, you need to understand market structure. But market structure is all about how the current flow of price, how price is moving. You need to get it. You need to understand how price moves, where price is moving towards, and why is price moving into this direction. And before price will be moving into that direction, we have things we put in place. We have things we put in place to refine those levels or to understand why price is moving in this direction. So that's what we are going to talk about today. That's the whole concept of market structure, where price is going, why price is going this way, and when price started going this way. That's the main thing you need to understand. Get it? So I think our first thing we are going to talk about is market structure. So as I was saying earlier on, market structure is the behavior, the condition, and the current flow of markets. You get it? Market structure is all about the behavior, the condition. Behavior is how market is moving, and the condition is how market moves to certain levels, and the current flow of the market. Either market is being in an uptrend or in a downtrend. So it highlights support and resistance levels, swing highs and swing lows. Swing high and swing lows. A trend is simply a consistent direction of price movement over time. So we have market moving in swing highs and swing lows, and also market moving in trend. So trend is simply consistent direction of movement over time. Okay, so when market is in an uptrend, that's a consistent movement of market over time, not forever. So when price is moving to the upside, we have the belief that price will definitely come all the way back. You get it? When price is going in an uptrend, definitely price is going to retrace from a certain price level. Price won't be in an uptrend forever, and price also won't be in a downtrend forever. Whenever there's an uptrend, there's definitely going to be a change in trend. We shift from being in an uptrend, then right now we shift of going into a downtrend. Price will be in a downtrend, then there will be a point in time where price will start ranging. You get it? Where price will start ranging. Then price will start ranging. Whenever there's a ranging market, there's always a breakout. Whenever there's a ranging market, there's always a breakout. Price will range for a period of time, then price will break out, continue an uptrend or a downtrend. Price will range, break out, continue a different trend. So a trend is simply a consistent direction of price movement over time. Market structure can tell you if the market is trending or not. So if you understand the concept of market structure, you'll get to understand if market is trending to the upside, or market is trending to the downside, or market is ranging. That's really understanding the concept of market structure. You get it? So since we have this diagram here, we have price being in an uptrend, right? We have price being in an uptrend. So that's where we see price creating higher highs and higher lows, higher highs and higher lows, all the way to the upside. And whenever price is in an uptrend, we see price breaking highs. You get it? Price breaking high, there will be a push to the upside. There will be an exhaustion. That's what you call an impulse. Then there will be a correction. Whenever price has an impulse move, there will be a correction to the downside. There will be an impulse correction, impulse correction. Get it? So this means price is in an uptrend. So whatever, the only thing we are focused on doing is we taking buy trades whenever price pulls back into our reasonable or our point of interest. You get it? So one main problem people have when price is pulling back is people always have this problem of like try to find a way where that particular pullback is going to end. That's one problem people normally deal with. So they see the pullback coming, people will just start buying from here, price will keep going down, buy from here, price will keep going, buy from here, price will keep going, buy from here. So by the time price gets into the refined zone where they're supposed to take an entry, they're already taking almost like three losses in a row. You get it, which is very bad. So we're also going to tackle where precisely should we expect a pullback to end. You get it, where precisely should we expect a pullback to end. So because the moment price starts pulling back, you see market giving some kind of reaction. So if you are not being smart, you just start buying buying, buying. So you will be taking almost like 3 losses before price will get into a zone whereby you need to actually take the right entry. You get it? Before price will get into the particular zone where you need to take an entry. So since we are understanding the concept of market structure, we also need to find a way to trade it a smart way. You get it? You also need to find a way to trade it a smart way. We can't just be like market is dropping, so we are buying. Market is pulling back, we are buying. There are things we need to put in place. There are things we need to consider before we make entry decision. Whenever price breaks structure and price is pulling back, when we are in an uptrend, the only place we are looking to pick buy entry from is after price has broken above previous high. There's obviously going to be a pullback. But where is the pullback going to end? Nobody knows. You get it? But we have ways, we have things we can put in place to tell us that, oh, this zone that price has gotten to, there is an 80% possibility that price will be reversing from here. You understand? And price will get there. You see price giving reaction, and price will definitely reverse from there. So that's one thing we are going to also take note.
Oh, okay.
That's one thing we're also going to take notes. So price will be in an uptrend, and price will be in an uptrend forever. Definitely, the buying pressure will exhaust. Then we see price switching from being an uptrend towards a downtrend. You get it? So we being able to identify that right now we were only focusing on buying when price was in an uptrend. So how do we change our bias? How do we know that right now this uptrend is finally over and we should change our bias from buying to right now let's only be looking at sales? Get it? So that's where we find a way to identify, well, right now there has been a change of character. Whenever we are going to have a change in trend, we need to have a change of character. And how do we identify the refined or the correct change of character? So that's also one important thing to get it, because we have internal change of character and we have external change of character. You get it? We have internal change of character, external change of character. Internal change of character is maybe when price is having a pullback, like on this same straight, price is having a pullback here. But on the smaller time frame, you will have an internal change of character here, somewhere here on the smaller time frame. You get it? Before price will start dropping. So people normally consider this as the overall change of character. Price giving a change of character on the smaller time frame inside a higher time frame pullback. You get it? That's one main mistake people normally do. They identify internal change of character for the overall trend, which is very wrong. You get it? Because this pullback here on a higher time frame is just a different trend on the smaller time frame. Let's say on the 4 hour time frame, you're
Okay.
having a pullback on the 4 hour time frame. You might have like maybe just 3 or 4 candles being a pullback before price will continue a trend to the upside. When you look at that same 4 hour 4 candles pullback on the 5 minute time frame, you are going to see that it's a whole different trend, creating lower low, lower high, lower low, lower high on the 5 minute time frame. You get it? That is just an internal structure. That's an internal structure inside an external structure. The external structure is the overall trend. That's the higher time frame. But then we have internal structure, which is the smaller, what's the movement of the smaller time frame inside the higher time frame. You get it? So you won't identify a change of character around here. But then on the higher time frame, this was the last swing low, which broke above this swing high. So before we identify a change of character on this higher time frame uptrend, price needs to break below this very low here, which broke above this swing high. So this is where we have our change of character, not what the smaller time frame is doing around here. You get it? Not
Yeah.
what the smaller time frame is doing inside the structure.
So, Austin,
Yeah.
are you saying that if maybe there is we are waiting for some change of character, we shouldn't look of change of character in like if the higher time frame, the big higher time frame, maybe the higher time frame is 4 hours. We shouldn't look into the 4 hour for like change of character.
So what I'm trying to explain is,
Do you understand?
yes, I understand. What I'm trying to explain is, if we are
Mm,
focusing on a higher
mm,
time frame trend, you get it. Let's say
Mhm.
we are
yeah,
focusing on a higher time frame for trend. Let's say the 4 hour chart is making series of what higher highs, higher lows.
yeah,
That means the 4 hour time frame we are in an uptrend. You get
yeah,
it. We are in an uptrend.
yeah,
So
Yes.
we are only focusing on buying on the higher time frame.
yeah,
You get it. So right now, we
yeah,
only focusing on buying, taking back because we are in a higher time frame on the 4 hour time frame. You get it.
yeah,
So right now,
mm,
if we are going to switch our bias from buying to selling, because maybe the 4 hour bullish trend is finally over, and we are right now we are in a 4 hour downtrend. We don't need to expect the change of character. You see the smaller time frame showing some kind of movement like this. Whenever there's a pullback, the pullback on a higher time frame is a whole different trend on the smaller time frame. You
oh, okay,
understand that?
okay, yeah,
The pullback, correction, this correction you are seeing here, this
yeah,
pullback correction you are seeing here, and this correction you are seeing here, on the 4 hour time frame, this might be just like maybe some four candles on the 4 hour time frame, just some four candles. You get it? But the
yeah,
moment you switch to the smaller time, let's say the 5 minute time frame or the 15 minute time frame, you are going to see this pullback. This pullback here as series of lower lows and lower highs on the smaller time frame. You get it? Series of lower
yeah,
lows. So the 4 hour time frame pullback is a whole different trend on the smaller time frame. You get it? So for us to confirm that right now we are going to continue our higher time frame buys. Maybe you might be having our demand zone here for the higher time frame, and we are expecting a pullback. A pullback. So let's assume this is the pullback, but this is the pullback on the smaller time frame. Let's say the 15-minute time frame. So since price is coming all the way down here, uptrend, get it? So whenever there's an impulse move, there's a correction. Whenever there's an impulse move, there's a correction. You get it? So we've had our impulse move here, and right now this is the correction we are looking at. Because so on the 4 hour time frame, we are just expecting a pullback. But on the smaller time frame, the 4 hour pullback, which might be just like some maybe some 3 or 4 hour candles or 4 or 4 hour candles, is a whole bunch of candles on a 5 minute time frame, almost hundreds of candles on a 5 minute time frame. You get it? So the pullback we are
yeah,
expecting on the higher time frame is a whole different trend. This pullback we are seeing here on the higher time frame, this might just be like, let's say 4 or 4 hour candles. But when you switch to the 15-minute candle, we are going to see this pullback to be a whole different trend.
yes, yes,
You get it?
yes,
So that means on the
yeah,
higher time frame, we are in an uptrend. We are in an uptrend on a higher time frame. But this pullback
yeah,
here on the lower time frame, we are in what? A downtrend.
yeah, in a downtrend, yeah, I understand,
Get it? We are in a downtrend because we've seen a change of character here,
yeah,
a pullback rate test, and another
yeah,
market breaking lower lows, market breaking lows approaching
yeah,
our higher time frame demand level.
yeah,
Market breaking lows approaching our higher time frame demand level. You get it? So for us to confirm that this right here
mm,
is not a change of character for the higher time frame. You get it? It's not a change of character for the higher time frame, but just that it is just
yeah,
a change of character for the smaller time frame downtrend. So this is just a minor downtrend. It
yeah,
is finally going to be over. So for us to be in a position
yeah,
we have to be in a position where we are going to see something like we are going to have a continuation of the higher time frame uptrend. And it means the smaller time frame also needs to realign with the higher time frame. So the smaller time frame has to give us a
yeah,
change of character here. Confirm that right now the smaller time frame downtrend is over and smaller time frame and has realigned with the higher time frame uptrend. Because previously we are expecting Higher time frame is creating series of higher highs and higher lows. You're only expecting to take our buy entries. Get it? But meanwhile, when the
Yeah.
pullback is happening here, the pullback on the smaller time frame is showing new lower lows and lower highs. You
Yeah.
get it? So for us to start
Yeah.
looking for a buy entry here, then our smaller time frame downtrend, this minor downtrends, has to also tell us that right now the smaller time frame is realigning with the higher time frame. So smaller time frame is also being switching from being a minor downtrend towards
Yeah.
to a major uptrend. You get it? So the
Mm.
smaller time frame
Yeah.
is realigning with the higher time frame. So we just expect a pullback here. Then we find our entry to continue the overall higher time frame trend. You get it? So what we saw
Yeah.
here, this change of character here, is not a change of character for the overall trend. You might see a change of character here. Price will keep coming down. But meanwhile, on the higher time frame, this was our last low. Sorry, this was our last low, which broke what this high. You get so before you switch from being in an uptrend to a downtrend, then price has to come all the way down to break below this low. So this is where we should expect our change of character for the overall trend. You get
Yeah.
it? Price has to break this low here to confirm that right now we have a change of character, a change of trend. That's the bullish and bearish impulse bullish scenario on the impulse moves. So you have price giving an impulse move, there's a correction or there's a pullback. You have another impulse move, there's a correction, another impulse move, and what there is a correction. So let's move to the bearish scenario. So on the bearish scenario, we are in a downtrend. So what do? We identify our swing highs and swing lows, right? Our swing highs and our swing lows. So right now, since we're in a downtrend, we're expecting price to keep breaking lows. So our strong highs are going to be breaking our what? Our weak lows. So that strong push that causes this break of fracture is what we call our bearish impulse move. You understand? That's what you call our bearish impulse move. Whenever there's an impulse move, there's a correction. You understand? So basically, the pullback is what we call the correction. And after correction, what happens again? There's another bearish impulse move, breaking structure. A valid correction or a valid impulse move has to break a structure or has to cause what? A change of character. And that's basically what we have here. So you have the impulse move, it's a strong push breaking structure, and the correctional move or the pullback is just a temporary retracement. It's just a temporary retracement in market structure to validate a pullback or to take out what a pullback. So these are the corrections we have, and we also have the impulse move. I think this is clear to you, right? Now, for us to be able to make good use of what we've learned, the market structure, identifying market structure, also identifying our premium and discount zones, we knowing our swing lows, our swing highs, and we knowing that which swing high is the strong high and which swing low is a weak low, or which swing low is a strong low and which swing high is a strong high. We need to combine multi-time frame market analysis. You understand? We need to combine multiple time frame market analysis because this is the only way we'll be able to, make renowned or good trading decisions in the forex market. We can't only use the higher time frame to look for our entry or to trade. You understand? So what we basically do is we use higher time frame to find the market structure and identify our point of interest. And on the lower time frame, we wait for order flow realignment, market lower time frame market realigning with the higher time frame price for us to look for an entry. So basically, multi-time frame analysis is very important. So I'll just read through. So multi-time frame analysis is important because it allows traders and investors to gain a comprehensive understanding of the market. By analyzing multiple time frames, traders can identify trends, confirm signals, and make more informed trading decisions, as I was saying earlier on. So the first point The first main reason why we use multi-time frame is confirmation of entry. And before you need to confirm your entry, you need to confirm your entry on a smaller time frame. You understand? So that you could be first in the market and you could have a very tight stop loss. You understand? So that your risk to reward would actually make sense. That's why we use the multi-time frame for analysis. Then we find our entry on the smaller time frame. So our first point is confirmation of trends. So by analyzing multiple time frames, traders can confirm the direction of the overall trend. For example, a short-term downtrend may be a correction within a large uptrend. This is what I said earlier on. They are seeing a short-term downtrend will be a minor correction on an overall uptrend. You understand? So after you identify, oh, maybe this is your actual trend that we have, higher time frame, we are in an uptrend. But we using multiple time frame, we could find a short-term downtrend inside our higher time frame, swing high, swing low, and swing high. You understand?
Yeah.
So for example, a short-term downtrend may be a correction within a larger uptrend. So this is what they are saying. A short-term downtrend, this is it. It's just a correction. Since I told you we have an impulse move and we have a correctional move. So a short-term downtrend here is just a correction in what? A larger uptrend. So we identify this just short-term downtrend here. And for us to be able to look for buy entries here, what do? We wait for the short-term downtrend to realign with the higher time frame trend, give us a change of character. And we can find our entry here to confirm the higher time frame what? Structure. Break another structure again, market pulls back. We find another entry again to continue what? Our higher time frame market structure or higher time frame trend. So this confirmation helps traders to avoid false signals and make more accurate predictions. When you are on a higher time frame trend, and you see price creating series of higher highs and higher lows, you are on a higher time frame uptrend. Rather, you are waiting to take a buy entry, right? So basically, on a smaller time frame or on a lower time frame, you are going to see some kind of a downtrend happening inside this higher time frame, what? Uptrend.
Bro, the screen no dey see you. No dey move. Austin.
Yeah.
Now we come.
So you are going to see a short-term downtrend in your overall higher time frame structure. You understand? By the moment you see this, what do? We know that you are in an uptrend because price has broken above structure. So here becomes your strong low. Here becomes what? Your weak high. So you are trading within this impulse move. This is the impulse move we have right here. So this minor downtrend here is what? The correction, right? So we're using multiple time frame. You'll be able to be in the best side of the market to make what? A good trading decisions. So we can find our zones or our point of interest inside our discount zone. So on the lower time frame, we are only waiting for the smaller time frame to realign with the higher time frame what? Structure. Smaller time also giving us a change of character here. Then we can only wait for a pullback to re-enter the trade to the upside. Say again.
It's not you, Banks.
Okay. So we use the multi-time frame to give us more confluence in the forex market. So this confirmation helps traders to avoid false signals and make more accurate predictions. So that's what the smaller time frame or you combine multiple time frame will help you make such a good trading decision. And the second point is entry and exit point. Before you enter any trade, you need to have your entry plan. You understand? Before you see the signal, you need to have your entry plan and also your exit plan. You understand? But you can't use the higher time frame to always determine your entry plan and your exit plan. That's why you always use the smaller time frame to identify our entry plan and our exit plan. You understand? On a higher time frame, you've seen an impulse move to the upside. On a lower time frame, you see markets giving us a correction. You understand? Your entry plan is you waiting for the smaller time frame to realign with the higher time frame perspective. That means you need to see a change of character on the smaller time frame here. Wait for a pullback, then you enter the trade here. That's your entry plan. Using the smaller time frame to find your reasonable entry. And what's the exit plan? The exit plan is that market broke above this highs here and came all the way up here. So since you're having your entry plan here, where are you going to exit the market? You can't just keep holding the trade down until you see that, oh, maybe I've made $1,000 before I will exit this trade. You need to have an exit plan. Your exit plan is you being able to identify the swing high where markets could possibly reverse from. You understand? Where markets could possibly reverse from. So that place should be your exit plan. So when market gets to this level, on the smaller time frame, when you see a change of character around this level, then you need to expect that market could possibly pull back into this level again before you see another push to the upside again. You understand? So when market gets around this level here on the smaller time frame, you need to make sure that you are exiting the trade because smaller time frame has given you a change of character around this particular level. Hello? Yes. Oh, you too, man. I they do meeting. You take what? Oh, I'm having a meeting. You can video call. Are you home? Oh, okay. Okay. I'll finish anytime soon. So you. All right. Yeah. So as I was saying, you need to identify the smaller time frame trend. You need to make sure the smaller time frame realigns with the higher time frame overall trend. You understand? For us to make an informed trading decisions, we having an entry plan and our exit plan is we targeting the reasonable zones. We don't just need to be like, okay, this trade I'm expecting 200 pips, 150 pips. They meant to place the trade here, no. They meant to place a buy entry here. You see people just extending their profit targets all the way to the upside just to see 150 pips profit target or 200 pips profit target. Price will come all the way up, then price will place back and come and take you out at break even or even your stop loss. Why? Because you don't have an exit plan. Your exit plan should be you taking profit around reasonable zones, around the next supply zones or the next liquidity levels. You understand?
Yeah.
So the second point of we using multi-time frame is what? Risk management. Risk management. So multi-time frame analysis helps traders assess the risk associated with a particular trade. By analyzing multiple time frames, traders can identify support and resistance levels as well as potential areas of volatility.
Yeah.
This information helps traders set appropriate stop loss levels and manage their risk effectively. So that's what I was saying. We always need to identify support and resistance levels in the forex market. So if me, I'm taking a trade right here, where's my stop loss going to be? My stop loss is basically going to be below this low here. Then my profit target is going to be exactly around here. 1 is to 4.3 risk to reward. Not that I'm expecting to catch 100 pips, so I'll just place the trade here Now just be scrolling my profit target. I see 100 pips. Then I'll be like, okay, this is my profit target. That means I don't have an exit plan. You understand? My exit plan should be me targeting levels in the forex market, levels on the chart, support and resistance levels where price would possibly reverse from. That's where I need to set my targets around those levels. You understand? And my stop loss has to be below this swing low here, which caused this change of character. You understand? My stop loss is not just being here for fun. My stop loss is being here because when price comes all the way down again and breaks below this low, it means price will pull back. Then we are going to continue going more down because this low has been violated. And this is the new swing high, which goes below this low. We are going to continue what going down. You understand? So my stop loss is just being here so that when price breaks below this level, I will be stopped out and I'll be looking for another entry. If price fails to break below this swing low here, you understand? And I see another kind of movement, price coming all the way down, change of character here, then I'll find another entry here and target all the way to the upside. So your stop loss shouldn't always be there for fun. Your stop loss should be level where price becomes invalid or where market becomes invalid whenever price gets into that particular zone. You understand? So here,
Bro.
here, and my stop loss just few pips below this structure low here. Because when price comes all the way down and breaks below this, then that means this trade becomes invalid, and this change of character was false change of character. So I need to wait to strategize and wait for another confirmation. As long as price is trading within this swing low and this swing high, we are still in an uptrend. And this is just a minor or a smaller time frame downtrend. Waiting for this smaller time frame downtrend to realign with the higher time frame for me to take a high entry or a buy entry to the upside. You understand? So let's go to the fourth point. So the fourth point is increased accuracy. Use the smaller time frame to increase what? Accuracy. So analyzing multiple time frames increases the accuracy of trading signals. For example, if a trader identifies a bullish signal on a shorter time frame, they can look for confirmation on a higher time frame. This confirmation increases the probability of a successful trade. You understand? So we can use the smaller time frame to find an entry here. Then we would enter. We are not just entering because the smaller time frame downtrend has given us a change of character. But we're looking at the higher time frame. The overall trend is telling us that we are in an uptrend. We are in an uptrend. So that also gives us a lot of confirmations towards place a buy entry here and target this highs. We will try to move from here and continue this buying pressure. You understand? Then we take our entry from this particular level here. So price coming all the way down here. What do you wait for? We need to see how order flow pushes into the market. So you see markets coming all the way down here. Minor time frame pullback or correction, showing series of higher highs and higher lows. You understand? Showing series of higher highs and higher lows. Then right now, price finally tapped into our 4-hour minor supply zone. I think Clinton's network has disconnected. We wait to see how price reacts when price gets around our supply zones. You understand? So here, price came from the down here. Price came from the down here, creating series of higher highs. So this is a minor uptrend, which you know that this is basically a correction or a pullback. You understand? This is our impulse move. So this is basically a correction or our pullback. The price came all the way up here, finally tapped into our supply zone, breaking what this structure. But still, price is in an uptrend. You can't make any trading decisions. You understand that? So what do? We need to wait to see the short-term uptrend realigning with the long-term downtrend. Long-term market structure is saying we are in a downtrend. Short-term market structure is saying we are in an uptrend. So for us to start selling, short-term also needs to tell us that, oh, right now we are in the same direction with a higher time frame. We're in the same direction with a higher time frame because smaller time frame has also given us what? A change of character here. Then we can plot our premium and discount tool here. Wait for price to come all the way up into our premium level. We find our supply zones inside our premium level. Then we take our sell and place our stop loss above this swing high. Our target, first target to be here, second target to be here, and maybe our last target should be here. But then, since price was coming down, we had this minor demand here. Price tapped in, and you see price going up. Take note, always, we don't just take entry from any supply and demand zones. Some zones are there for price to react to them and push unexpectedly. And it's not by force for you to catch that particular entry. You understand? Some movement happens around zones you don't even trust in. And you need to allow that to grow. Then you wait for the zones that you are actually waiting to take your entry from. For price to get there, then you take your entry from there, then you make some cool profit. So this is we taking our first entry here and making almost 1:4 risk to reward on this particular trade. Nonetheless, price came to the down here and pushed all the way up. So since price has pushed up, what do we see here? We see what a change of character here on this push phase because we are targeting this for our higher time frame supply level. You understand? So price comes all the way up here. You see smaller time frame breaking structures to the upside, breaking highs, and here this was the last low which broke above this high. So since we have this break of structure, we are only expecting market to come here and maybe would have seen a pullback. But then market has already mitigated the higher time frame supply. So when price is coming all the way down here, we are not going to trade from this demand again. But this is a smaller time frame demand, whilst price has tapped into our higher time frame unmitigated level. So this demand here, when you place a buy here, this level will be violated, or price will tap in, show like it's going up, then we see price coming all the way down again to hit your stop loss. You understand that? So since price has now tapped into our higher time frame supply level, we need to make sure that right now our short-term uptrend realigns with the higher time frame downtrend. So you have price coming all the way down here, breaking below this low. So we have our change of character here. This is telling us that right now we have our first confirmation, price tapping into our higher time frame supply zone. Second confirmation, price giving us a change of character. That means our short-term uptrend has realigned with our long-term downtrend. And our third confirmation, we plot our premium and discount tool here. We wait until price gets all the way up into our premium level. Then we find our entry. We identify our supply level here, or our fair value gaps here, or other blocks, breaker blocks, or any block that we are looking at. We identify that here. Then we take our sell entry. Our stop loss should be above this swing high. Then we target here to be our first TP, second TP here. Then our last TP will be this last low here. This is when the short-term downtrend they align with the higher time frame trend. You understand?
Yes, boss.
Realign with the higher time frame trend before wait for a pullback and find an entry all the way to the downside, or in other ways, all the way to the upside when we are in an uptrend.
Okay.
So one thing you need to take note of is whenever you are trading within the short-term trend, always be looking ahead to see if price has mitigated a higher time frame supply or demand level. When price was coming all the way up from here, short-term uptrend, pulling back, maybe you can take an entry from here, but you just risk small because you're expecting price to come here before you start dropping, right? Take an entry here, price came all the way up here. The pullback, maybe pick an entry, but price has not yet mitigated the higher time frame supply. This is though you trading against the trend, but you could be making some small profit within this range. Here is going to be your final entry inside the internal structure. You buy here when price gets into this 4-hour zone and it takes your profit. Forget about buying again from here when price pulls back. But price has already mitigated this higher time frame supply, and we are probably or anticipating that price will give us a shift in market structure. The pullback, then we sell this price all the way to the downside, following the higher time frame perspective. You understand that?
Yeah.
Yes. Always take note of that. Whenever price mitigates a higher time frame trend and you're expecting a pullback to or for a counter trend, you need to be very careful and think twice before making that particular decision because it could turn really bad.
Okay.
So this right here, the same scenario, is we identifying our swing highs and our swing lows. Note we are in the downtrend. You understand? We're in a downtrend, so here becomes our swing high and our swing low. Most importantly, the high here becomes what? Strong high. You understand? Because we are in a downtrend and we're expecting strong highs to keep breaking weak lows. So this low here becomes what? Our weak low. So whatever is happening within this impulse move, whatever is happening within this leg, is just a correction or a pullback phase to help us identify when price realigns or when a short-term downtrend realigns with the higher time frame downtrend to continue our selling strategy. Continue what our selling price. So what we are going to do right now here is after we identifying our 4-hour supply zone sitting right here, what do? We are expecting the order flow, internal structure keep creating higher highs and higher lows, approaching this level. As I said earlier on our previous example, I told you that when you are trading in the internal structure, After price has given a break of structure, there will definitely be a pullback. Maybe you take a buy entry here, your stop loss will be here. Price came all the way up here, breaking another structure. Another buy here, stop loss here, another re-entry. The moment price taps into a higher time frame unmitigated level and price starts pulling back, ignore this demand zone because price will definitely break through it, or price will tap in, give you some kind of reaction that it is going up and break below it.
Okay.
Get it? So right now,
So please, it means that that demand area is not strong anymore.
yes, the moment price taps into a higher time frame supply or demand level,
Mm-hmm.
you had a break of structure here. Price has mitigated higher time frame supply. Price is pulling back. Maybe you have your demand level sitting here, right?
Okay.
Ignore this trade because price will tap in, give you some kind of confirmation that price is going up, and eventually price will just break below this level.
Okay.
You understand? Because you took a buy here, you took a buy here. Sorry, you took a buy here, took another buy here. Then here, price has broken this level to the upside. Tap mitigated higher time frame structure. Coming down, we ignore this trade because it's like you trying to catch a falling knife.
Mm-hmm.
You understand? You might
Yeah.
definitely lose your fingers. So price coming all the way up here, price mitigating a higher time frame supply level. What do we wait for? Always, we need our short-term trend or our short-term correction or our short-term pullback to realign with the higher time frame trend. Higher time frame, we are in a downtrend. Pullback phase or on a smaller time frame, we are in an uptrend. Or price is creating higher highs and higher lows. You understand? Price should tap in. Then we identify this low here, which was a big contraction. When price comes all the way down, giving us an order flow realignment, then that means this is telling us that the short-term uptrend has realigned with the higher time frame downtrend. The moment we see this change of character, that means we are no more in an uptrend on the pullback phase again, and we are in a downtrend. So what do you wait for? Waiting for a pullback into our premium level. Doesn't matter if we have our supply level here, our fair value gap, our order block, or anything inside that premium level here. We take our entry and put our stop loss above the swing high. Then we target this lows here. When price is going down here, you keep taking profits until price gets to your main structure or your main target.
Okay.
Right now, we've had our first entry here. But what happened? Price never came all the way down to break this low. You understand? We had the
Yeah.
entry confirmation here. We are expecting this week low to get broken, but price never came down to break this low. We still have space here to what? Go. We are still in the bearish scenario. We've had our first confirmation here. We took the sell, we made some full profits. Right now, price is retracing back. You see, sometimes you enter trade and you see price coming back to your entry again. And we think,
Oh,
oh,
okay.
price is rather generating liquidity. Price is rather generating a new strength to push price all the way to the downside again. You understand?
Yeah.
Because we are expecting this low to get broken. Price came here and failed to come all the way down. We are seeing a pullback again. We've seen a change of character here and even another break of structure, giving us more confirmation that price is going to drop all the way to the downside. You understand? So this is the internal bearish structure, which has realigned with the external bearish structure. So even if you would miss any entry, after you missing this entry, This particular entry is something you should never miss. You should take this entry by then. Because order flow has already realigned with the higher time frame trend. Price critics shoot
Okay.
for higher highs and higher lows. The moment we see price coming all the way up here, we identify another supply zone here. But this was the last high which broke what? This low here. This is what we call trend continuation. This was a shift in market structure, reversal pattern. The first entry here was a reversal pattern. After taking this profit, price coming here, this is a trend continuation. We've taken our first entry, and here becomes our second entry. Here becomes our supply level. Price is then creating higher highs and higher lows. Price has gotten into a premium level, considering the high here and the low here. Price definitely is in our premium level where we have our supply zone here. We can't just sell because price has gotten here. You can sell from here and maybe you see price coming all the way up to finalize, mitigate this last high here before we start selling. Since you don't want that to happen to you, what do? Wait for more confirmation. Price has to then tap into our supply level here again. Again, give us a change in market structure or an order flow realignment. The pullback, then we find our entry here. Then this entry here will then take us all the way down to hit what? Our target right here. And even break below this low. You understand? So we have order flow realignment giving us an entry. Short-term uptrend turning into a downtrend, giving us an entry. And again, that same level giving us a pullback, building liquidity here for another push to the downside. So within this whole impulse leg, would have taken what? Two entries. Our first entry being here, market coming all the way back, and our second entry being here. Hope you understand up to this point.
Yeah, bro.
So we are going to have a live chat example using the same scenario as explained earlier on. So looking at this chart, you could clearly see that we're in the downtrend, right? Because this is the higher time frame supply level. That means price already came from the top here all the way to the down here before we are seeing this pullback phase, right? Is that clear?
Yeah.
So since we have our 4-hour supply level here, and this is going to be the pullback phase on the 2-hour time frame, which I was telling you. Remember, I was telling you that you could be taking entries when
Yeah,
prices.
I have that
Yes,
slide.
yes, we could be taking entries when price is pulling back. Price is pulling back. You could be taking nice entries. And here, this was the last place I was telling you that you need to avoid this particular entry because price will definitely break below that structure. If you had this low here, because the break of structure, price came all the way down here, right? And this was the last high. Price gave what? A break of structure here. Are you following it? And
Yeah, bro.
price came all the way up and finally mitigated what? Our 4-hour supply zone. After price mitigation our 4-hour supply zone, what do you have here? I think this was the last low which broke this high. So here probably becomes what? Your demand level, right? So I was telling you that after price mitigating a higher time frame level, you need to avoid the lower time frame demand, the opposing demand waiting below it. So this is why I was telling you that when price breaks structure and mitigates higher time frame supply and price come back into a demand level, please avoid this particular grade. Sometimes, as I was telling you earlier on, price will definitely break below it strongly, hit your stop loss, or sometimes price wants to just be playing with your mind. It's what is going to happen. Price will tap into your demand nicely, giving you this candlestick confirmation. When you see price going up, eventually you're going to be happy, right? That price is now going in your favor because you place a buy entry here. Then what happens again? You see price rejecting and hitting your stop loss. No matter how many stop loss you set, price will hit all your stop loss. If you're not managing your account well, you're going to blow your account with this single trade. You understand?
Yeah, bro, I get you.
So that's what I was telling you right here. That's what I was telling you right here. That the moment price mitigates a higher time frame level, this your demand here becomes invalid. You understand? It becomes invalid because price would come here, react to the zone, and eventually break below. Or price will just come straight, break below, giving us a change of character. Then we wait for it back to rather enter the trade to the downside. That is basically the same thing we are seeing on the live chart. But then now you understand everything clearly. Why I was saying if price taps into a higher time frame unmitigated level and back, avoid the opposing demand zone you are waiting to trade for. Price would react to it later on, then it will break and just violate it. So here, after price violating this level here, what do? It means order flow, market has realigned with the higher time frame trend. Because we switch from being in an uptrend to what? Being in a downtrend. So we pick our premium and discount zone. From the swing high to the swing low here, we have our premium level here. Price pulling back. This was the supply level I identified on the premium level. So we take our entry from here, then we sell from here to the downside. If price break this low here, we identify the supply level here again. Wait for price to come all the way up, tap in, then we sell again. That's the same concept that happened on this very chart. You get it? Price will first tap in, give us our fair sell. Price will then try pulling back into this structure again. I will look for another sell again. When price, this minor uptrend realigns, sell again, then we keep price going all the way to the downside. You understand? So this is basically the same structure I was telling you about. So we took the sell here, price came all the way down, breaking this structure to the downside.
Austin, I think the downside there, the second order block, or that one is not good. It's not that one. Which one? If that one we block, it break this structure, Abby.
Yes. So this was the last high. This was the
Yeah.
last high here, which broke or which caused this change of character. The price came
Yeah.
in, then we have this drop. And again, we had another pivot fracture down here. So we also identify this other block here, which has a fair value gap.
Yeah.
Price came all the way up to tap in here again. And right now, we are seeing this what? Selling pressure. Get it? It means the short-term uptrend has realigned with the higher time frame downtrend. So we are only going to continue selling until price gets all the way to the downside. We always need to apply the same concept. Whenever you open the chart, identify your market structure. Identify your swing patterns.
Banks.
So,
Yeah, this premium price that you have where you have the red line,
okay,
does that mean that that place you go half risk, or because I can see another demand level on the top there? No, not this place. Oh, the other one that you showed earlier on. Yeah, this one. You see that there is another area that you have marked there.
there's another supply.
Yeah. So
Yes. So,
yeah, another supply. So that means that here you go half risk, or
so on this particular trade, what I did was I figured this was a refined one to trade from because it's in the premium level. And when price got here on the lower time frame, I got the confirmation. The lower time frame also caused a change of character and a pullback inside this same supply level. You understand? So if you are raising 1%, you can raise 1% here, then you make profit. If price hits you stop loss, if price hits your stop loss here, then you can come up here to raise the same 1% again. And when this one gives you 1:5, dividing 1 from 5, you still have 4% profit. You understand?
yeah, bro.
Yes. So that's the main reason why I took this trade.